Hi traders, I just want to bring your attention to dollar yen with the view to potentially trading it long. As you can see here, dollar yen has been retracing ever since November last year, and this is the weekly chart. We can see here that it reached the high towards summer, or summer to autumn last year, and we've just been seeing a period of retracement. Now we're at a very significant level now. We're at 100, which is a psychologically strong number, but also if we draw the Fibonacci from the very start of the move upwards back in 2012, all those years ago, to the very top, November last year, or October last year, sorry, we can see that we're actually at the 50% Fibonacci retracement level, which once again is psychologically significant. Now, you wouldn't be surprised that we've actually got a level around here as well, around about 101. So this is a potential zone where we could see a continuation. We also, for those people who look at the RSI setting 6 and the stochastic, which is something which we do, we could see bullish reversal divergence as well. If we take the recent, say, 10 to 15 weeks worth of price action where it's been flatlining, moving sideways essentially in a kind of triangle, we can see that even though the highs have been getting lower on price action, the lows, the RSI setting 6, have been getting higher. And so have they also on the stochastic as well, setting 833, which is a clue to us, an additional clue that there is a change in the winds, and we could potentially be seeing bulls coming to the market as the bears are getting less and less pronounced in the market. If we drill down to a smaller time frame like the daily, we can also see an additional clue. We can see that on the daily we've been trending nicely downwards, and we have been really since December 2015, and we've been making key lower highs and lower lows up to the last lower low was in late August this year. Then we've been seeing, okay, a lower high. That's absolutely fine. That's what we want to see for those bears in the market, for those looking for shorts. But lo and behold, we got a higher low, and the last high failed, or just about met the previous swing highs, just about lower. But what is quite significant for those people who love trend lines is the fact that we've just broken out of a downward trend. Now that is significant in itself. So this is an additional clue that there is bullish momentum in this for potential long. And what we're waiting for is a potential trigger. So we could do this in two ways. What we can do is we can wait for a pullback either on the daily or the weekly, followed by a bullish pin bar reversal to interact with this trend line. You see that this trend line has previously had price respecting it as trendline resistance. Well, now it's broken out as of early October. So what we're anticipating is price to pull back and test what was trendline resistance as trendline support. This can happen with trend lines as well as horizontal levels, I'd like to add. So we're just waiting for a pullback, and then if, as and when we get a bullish pin bar reversal bouncing off or near to this trend line, we're going to potentially go long if we get a bullish pin bar reversal. Of course, we could get the bullish pin bar reversal coming down a little bit further to this level here, down about to 100 where price has gone before. Just here, let's draw this in. There we go. This could happen. We would prefer it if price did come down and test the trend line rather than this horizontal level, because that would be a sign that the bulls have overcharged or overpowered the bears in the movement to the downside and have intercepted and are driving price up. Okay, so that's what we're looking out for. Just to recap, we can get this on the daily or the weekly time frame, preferably the daily if we're looking for a tight long-term entry with a smaller distance between our entry and our stop loss. So just to recap, so you've got this in context, dollar yen is looking bullish. We're also entering a seasonally bullish time for the US dollar. Let me just show you very quickly. End of October towards November, we've got a bull run. Historically, over the past 20 years, we've had this. That's the fundamentals. We've also got the fact that Japan have absolutely no incentive to really increase interest rates at all. They want to keep interest rates low to kickstart the economy, to keep their balance of payments in line, and their exports also competitive on the world stage. They've got less of an incentive to increase their interest rates than America. And if America, of course, do increase their interest rates, then it's likely that the US dollar will go up. Okay, so from a technical perspective, we've got a retracement to the 50% Fibonacci level, correlating with a big number, 100, correlating also with a level, and we've got a breakout of a downward trend on the daily time frame. We've got bullish reversal divergence on the weekly time frame, and also on the daily, actually, if we look at this long term. And we've got, like I said, the trend line break on the trend line. We're just waiting for a pullback to this trend line, which was intercepting price as trendline resistance, now potentially acting as trendline support prior to a move to the upside, or price could come down to 100 prior to going up again. Okay, so this is a long-term move which we're anticipating in the next few weeks. Happy trading, folks.